apparently in Instagram you have to have 1,000 followers. I've got like 2,000 followers on Twitter, almost 10,000 on YouTube. But TikTok you need 1,000, which TikTok is, I guess you need to be live for 10 seconds to get followers on TikTok. But anyway, I'll try to build up a little AI page on TikTok and then maybe consider going live there. Anyway, but we're just gonna hang out, have a couple live sessions pushing, and Zoom is running. YouTube is hot. That's right. Okay, I've got 52.6 on Thinkorswim. Let's see what we have here for March 10th. We've got a plus minus. You've got 52.6, Ernesto. I'm showing 69.5 this morning. SPX Tuesday. 52.7. That seems really low. I'm going 69.5. That's what my Tasty is showing here. 69.5. Hang on a second. Let me log back in. That did show for the 10th. Okay, 69.52 on SPX. So that's going to be our plus minus on the morning. I'm just going to round that up to 70. And let's map this thing out. So I'll recenter our daily profit rate indicator. 67.95 closed yesterday. 67.95. There's my VIX box. VIX is around 25. Let's do the math on that. Open up a couple more workspaces. All right, so there is the chop fest, bounce off the 200-day moving average. If we come right back into this level, you can see that that yellow box was support. If it came right back into it and causes resistance, we'll see what today brings. Obviously I'm not trying to call a top or bottom, but again, if the VIX is going to continue to go down, I think that today might seem like an easier trade if we fade and focus on like, a bear call spread. If the market goes, we've had technically what I consider yesterday an inefficient day. I mean, based on the open, that was an inefficient day by just a couple of points, okay? But based on how I calculated, I wouldn't quite say this was inefficient because the gap from the previous day's close, the 100 points was up here, and it still didn't quite get there around 68.50. So I'm going to keep the trade size the same. I'm not going to do anything silly as far as like, all right, I think this is going to be like an efficiency kind of revenge trade. We just had that, that late day squeeze from Trump. All right. So I think it's harder for the market to go up faster, but we have to acknowledge there is upside risk in these markets. Starting at 0.17. I saw this morning down about 0.4% in futures. Now it's 0.17. So there's a gap fill here at 68.30. If this acts as support becoming resistance, this market might roll over a little bit faster this morning and come back into this Trump inefficiency from yesterday around 67.25. So I want to respect that. Let's see where like our 10 deltas are at. Let's see where our 5 deltas are at for the morning. But I'll just measure out plus 72. We've got gaps, maybe a tiny little gap here, but we'll go plus 70. So let's mark out the close yesterday, plus or minus 70 to the upside. That puts my expected move around 68.65. Put this in blue. And we're gonna have a tiny gap lower. So let's go 0.16 or so. Oh, that's a really small gap there. So 67.85 is our starting point. And let's go 70 points to the downside. All right. So we're looking at, for market maker move today, efficiency would be, not taking out that Trump push yesterday. We'd be, again, expect to move is around 67.14 to the downside and upside around 68.64. Okay. And there's going to be a tiny little gap. Now we'll see how price plays out. I'm going to try to, I want to look at the deltas this morning. And, if we have a plus or minus 70, again, that's the expected move pre-market. We might see the VIX, go down today. Let's go to my little gamma workspace. Let's bring up see if we're in positive, negative gamma for today. So here's live gamma this morning. I'll bring up dynamic trend as well. All right, what's happening? All right, I got some YouTube comments here. Yeah, Steve, I'm already streaming. If you want to see my screen, then go to youtube.com/financial wars. You can join my Telegram, youtube.com/financial wars. I'm screen sharing this one, but that way I can run two. I've got Zoom, youtube.com/financial wars, and my YouTube channel. So if you want to tune into the screen share, then jump into Zoom or jump into Financial Wars. Okay, I'm going to go real-time gamma here. See what pre-market looks like. All right, XSP, we finished there positive. Let's go SPX. So here's a quick look at our intraday gamma. This is pre-market. Wow. It's an interesting read. All I'm seeing this morning is just a big handle around 6,800 and not really a lot else. So how do I read this? Well, like I said, this inefficiency, if we move directionally to the downside, I'd say that's where the market may be wanting to kind of retest. But if we just kind of hang out for the day, something around 6,800, maybe the day is just like pretty quiet. Maybe yesterday was considered an inefficient day because of that late day move, and that might have been the quick like 0 DT hedge that got pushed into today, and the market's going to have like a pretty wide expected move and deliver a fraction of that. So something to consider for today's trading. Okay. All right. So we can try that. Let's see. Since we are pushing, maybe I don't know. Maybe tomorrow I'll try something different on my YouTube. I'll push out Zoom, youtube.com/financial war. I'll push out on my channel. If you want to see some screenshot, I'll do that too. But we're just switching things up a little bit. All right, so we've got some measurements. We have positive gamma above 67.55. We have some gamma levels up here to 68.35 and 50. So as long as I am selling some calls, there's a decent transition zone from 68.50 to 6900. But as long as I'm selling calls, probably in this area, 68.50 to 6900. I mean, plus minus 70. If we're going up, 100 plus points, that's a very low delta. But I don't know. I'm just curious. So might be stacking some bear call spreads this morning. See where price is at. And if I'm selling puts, I'd probably want to be selling puts below 66.50 and see what those deltas look like. I'm going to try to stay like pretty wide, pretty low delta, pretty safe, and look at the day. Okay. David, it was Trump. I mean, Trump was talking yesterday. He was on the calendar at 5:30. It should have been something after market hours, and he squeezed in a little CBS comment that said that the war is almost over, and the market ran with it. So that was all Trump in the afternoon. And what was annoying is I was, I was kind of like lulled into like daily profit plays, like not even on my radar because it was such a solid trade all day. I'm like, we're gonna have a full winner, and that pushed it. And I was like, oh crap! It actually tested my 67.90 level. And then meanwhile, engineered options was full profit. So I'm like, oh, okay. And as soon as it happened and we're threatening my call side, I was watching the defense and I posted in daily profit play, if you've got some net profits, let's look to manage this. It settled right in between. I mean, I needed it to settle below 67.90. It didn't. So it was a partial loss. I lost like 480 yesterday. Could have been worse, but it could have been managed a lot better. It could have been taking daily profit play profits, and I had $600 or $700 offered up on that defense trade. That certainly would have been a much better result, grabbing like $700 to $800 total for the day versus losing $480. So a little frustrating on my part just to not manage the trade a little bit better. But that was a complete surprise in the afternoon. That should have been after market hours with Trump. But I can promise you, if you follow the money somewhere, somebody got paid on that squeeze. I guarantee you somebody got paid in that squeeze. So we'll see. There you go, Dinosaur. You got it. Okay, nice. Pio said I made 700. Good. 68, 60, 66, 80, 10 wide for $1.15. Okay, Ernesto, are you like prepping right now on SPX, or are you looking at like futures to trade that this morning? Hey, Wade. Yeah, so I mean, it's nice to see that so many of you close off for profit, and that's great. Prepping, okay, yeah. Yeah, that's the plan, is we, set up trades and win the day. So, all right, we have levels to watch. As long as I'm selling, and again, this is within the expected move. Let's take a look at the VIX here. So VIX at 25, I think. 24.76 VIX. So this will be interesting. If we have this big flush again in the VIX, watch out for that upside risk if the market's going to continue to rip. We are looking at a positive gamma flow today. So as long as price stays above 67.55, it's positive gamma. Okay. So the temptation is, as long as price stays above 67.55 and this market continues to drift higher, then we're wanting to sell maybe 15 delta puts, 10 delta puts. But I don't think that a 15 delta put or 10 delta put is going to be below this recent low, which to me would be like a pretty safe trade, right? So again, like, treat it just like any other day. We have our levels, okay? If the market is efficient today, it should stay within 67.14 to the downside and 68.64. So if we're looking at something, maybe 68.75, 68.80 zone, 66.80 zone, Ernesto, sounds like that's about where you're at this morning. That looks like a pretty good plan by default. So it wouldn't be a bad setup. We got a few minutes for the open. Trump's talking at 3 p.m. today. Is he on the calendar again today? Is he actually on the calendar today? No. It's possible I could talk to Iran. Okay. When was this? 2 hours and 17 minutes ago? All right. Well, it all is like low impact. We do have CPI numbers coming out tomorrow morning. Hopefully there's today could be treated as like the calm before the storm type move. Just because if we have CPI data, hopefully that has a bit more of like effect as far as real volatility would be Wednesday, Thursday, Friday, not necessarily today. So I mean, look, it's always this. It's just a trade. It's just a day. And our goal is to try to set something up that we can win. 3 p.m. policy meeting. All right. Well, same thing applies then if you have a suspicion that Trump is going to be on the calendar, maybe saying something to move the market. I mean, what's interesting is, is this, you can already see how sensitive Trump could potentially be to the market, because a top to bottom around 6% is the Trump put. I think it'd be, I'm not saying this is done, but it's like, I'd be shocked to see this type of dispersion trade not at least offer like a 10% correction. So, but if it's like, do everything you possibly can, kitchen sink this thing, grow, jawbone like crazy, and I wouldn't put it past the market to have, more upside pressure, upside run, blows the top off. Everyone that's bearish is all of a sudden just put in the pain trade. And then this thing, when it's done, it's going to roll over, much, much harder at some point. I don't know when it is, but this is why you have to respect, like, if you are long as a big picture trader, that's probably the better trade. Until price and everything says otherwise, it is better just to side with the longs. We had some really good fills yesterday in waterfall income. Yeah, if we just stay in this churn zone, all of our strikes are down here between like 6,200 and 5,800. So we're just letting time be our friend on waterfall income. And if we end up breaking highs again or even churning through this level, I still think we get good bounces if we go low, or we can breach 7,000 again to the upside. Okay. So, all right, we're going to have a open here in just a few minutes. All right, just checking YouTube, checking comments. Any questions? We good? Let me see. I'm going to check our Financial Wars channel and see if we have any questions coming in there. Okay, chat's open there too, if interested. All right. Sherry popping in new today. We have any new watchers? Stacey says, read your piece about position sizing. Very good. All right, cool. Thanks. Hopefully Where'd you find that actually? Position sizing on my YouTube channel. I've got the Trading 101 video series, Keep It Seriously Simple, Options 101, lots of stuff on my YouTube channel if you check out some of those playlists. All right, 3 minutes before the open. Positive gamma above 67.55, gamma levels 68.35, 68.50. Expected move around 68.64. So this to me is what I'm going to pay attention to as far as picking my strikes. See if we can stay within this level and this level here. And I might, put in my kind of standard daily profit play and then look at a couple of defensive options and see what the day gives us. CPI is tomorrow, so hopefully, today's going to be treated like efficient day. Tomorrow's going to be CPI. Maybe it lets loose a little bit more. Okay. All right. Naresh said hi. What's up? Telegram link. Oh, I gotcha. Cool. Okay. 9:28 a.m. 2 minutes from the open. Meanwhile, like the heat map yesterday, even though everything was down, we saw like 70%. Let's go FinViz. 70% of the market was down, even though there was a thrust to the upside. So yesterday finished essentially flat, which was crazy. This was like a 70% decline that all of a sudden finished basically flat for the day. Look at that comeback. That's a big heat map. Big surge in semiconductors. Nice little screen by the Mag 7. And some stuff obviously red is 50-50, but like some of the big comebacks, Google having a great day, Nvidia having a good day, Broadcom having a great day, Micron, all these semiconductors coming back in a big way. Healthcare stayed pretty green. Financials, a little bit worried about financials. I don't think to the point of like, oh my gosh, it's going to be this credit crunch and this giant crisis of insolvency. It's like, I don't think the private credit stuff is really going to be affecting. It could be on their books, like BlackRock or Blackstone is having some private credit stuff. But, credit spreads for the most part are still relatively tight. And I do think that these banks are so big, and we've learned enough from 2008 that they're not going to be, as exposed to something like that's getting kicked around with these private credit defaults and delinquencies and things like that. So until they show like real signs of stress, I would still think the market's going to be relatively stable. And this dispersion and churn continues to happen. I know, Arthur. I'm just pushing out the channel. I can do a YouTube stream tomorrow. I just have it running on youtube.com/financial wars and Zoom, so I can push out my stream tomorrow if we want. All right, it's opening bell. Off we go. Looks like we had little to no gap this morning. We're essentially flat. Let's take a look at our levels. Let's go 68.70, 67.14. So looking at maybe 6,700, 68.75. See what that looks like on SPX this morning. So 68.75 is a 4 delta. Wow, that's really low. So 64. Let me see. I'm just going to go like right at the strikes and see what that looks like. So 65 is my measured move. Let's see what a 10 wide looks like there. And the 67.14, I'll go 67.10. 67.10 is a 12 delta. So that's a buck. Let's see if I can get $1.55. So what I'm doing here, bear call spread 68.65, 10 wide. So 68.65 sell, 68.75, and then puts 67.10, 6,700. See if I can get $1.50 on this one. Let's go $1.50. Try to get $1.50 on this 10 wide. Well, that was easy. $1.50. If you get 5 or 10 cents more, try to get 5 or 10 cents more. And then I'll go another 10 wide and maybe let this one marinate a little bit. So 70 by 80. Try to grab another. Let's go $1. Let's put this one in at like $3 in case we have some price pressure. So pending order there, and I'll put some defense in as well. All right, so trades in 67.10, 6,700. What's up with my... I'm not getting a live feed right now on Dynamic Trend. That's weird. Okay, let me get this typed into Telegram. So you can let this marinate, but I'm in for $1.50. New trade. Today's the 10th. 68.70. 68.80. 66. 67.10. 6,700. $1.50 credit. Let that hang out for the morning. So that's in for $1.50. Price is pretty quiet this morning. That's fine. Okay. Let's see if I can get another one in. I don't mind this level here. 10 wide's fine. If I went up a little bit higher, let me go after another $1.50. See if that'll fill as a pending order. And what were our lows? Lows around 66.30. Okay, see if this will get filled for $2. All right, let me look at some defense trades. All right, got some live. Here's real-time gamma, just kind of hanging out, chilling. As long as you stay above 67.55, that's positive gamma. Limited upside as far as these kind of call walls here, 68.30. If we hit the 50% ATR, that's 68.59, so my strikes are above that. So I'm in with a 68.65. All right, so I'm pretty much selling right at my measured move. So 68.65 in green, and that is a 67.14. I think I did the 10. Yep, so I'm pretty much at the expected move for the day. There's 10. All right, so let's see what we end up getting on this. Like I said, if tomorrow's CPI is going to be more of a a mover as far as volatility goes, maybe after yesterday's surprise move in the afternoon, the markets are just kind of big expected move, not a lot of actual direction. So there's a couple things we always remember: the expected move, right? The expected move is hopefully greater than the actual for us to make money, and then the implied, same thing as the implied volatility, is greater than the realized volatility. Just a fancier way to say the same thing. So expected move is greater than the actual, or implied volatility is greater than the real volatility, or realized volatility. That's how the markets say it. Okay. All right, we'll keep an eye on that. Let's see. Keep an eye out. So pending order for $1.50 on another 10 wide. I'm gonna cancel that one. Sprinkling some defense. All right, so if I go defense, let's look at the 67.05, 66.90. That'd be a 15 wide. 66.90. That's 15 wide. And then I can go 20 wide. See if this one will trade for 50 cents to $1 credit. Okay, and then sprinkling some defense here. 68.70 by, I guess we'll go 85. Keep it on this one for $1 credit. So these trades too, with this broken wing structure, if I put on this defense, I also don't mind taking those trades for like a 5-cent debit. I don't want to take it for debit. I'd obviously rather take it for a credit. But if I take that trade where I have a buy, sell, buy, and it creates a broken wing butterfly structure, this is a $1,500 profit trap. So it's a $15 profit trap. If I get that trade filled for like 5 cents debit or 10 cents debit, I still get a profit trap of up to $1,000 or up to $1,500. Right? So that will help offset. If I take on any heat for my 10 wide, that's enough to potentially, offset the risk. So I do monitor those trades. I'd prefer that they get filled for any type of credit. If they offered 50 cents, great. If they offered, 10 cents debit, 5 cents debit, that's fine. But any credit's good. 10 cents is fine. But again, know the math. If I'm doing a dollar credit, I'm risking $400 max to make $100 plus a $1,500 profit trap. If I'm getting it for a debit, let's say I get filled for a 5 cent debit. Well, I'm technically risking $5.05 on the trade, but I have a $1,500 profit trap to hopefully offset. And based on our measured move, this is why I'd be doing the trade that way. Is if my 10 wide put is threatened, this gives me a $15 profit trap. And technically, because of the profit trap, we have up to $29 to kind of protect ourselves. It may not be perfect and offset all of it, but if we are risking, let's say $850, and I can offset it with a $500 profit trap, I'm at least saving myself a lot on the risk. If we hammer one of these profit traps and it offers up to $1,500, then it covers the risk in full, and we can walk away profitable. Okay, skip in for $250. Nice. You in the same trade, or did you go wider? David's in $150. Okay, good. $250. Did you go wider? You went same strikes. You went 10 wide and got $250. Interesting. I'm showing it trading for like $1.35 right now. I'm just not sure how you got $250. Real account? Live account? All right. Well, give me your affiliate link for the broker, because that's a good fill. Yeah, good question from Sean. Sean says the 10th or 11th. Yeah, hopefully that's 0 DT. Anyway, I mean, you're in. Keep an eye on it. Ernesto, $1.50 on 10 wide, 68, 65, 67, 05 while you're way up there. Damn, dude. You got higher strikes and lower strikes for the same credit. Unbelievable. You're one short. So it's 68.70. Or I'm sorry, 65 by 75. Did I not post that? Yep, it's 65. Sorry. So it's 65 by 75. 65, 75. It's in Telegram now. Thanks for that fix. So 68, 65 by 75, and then 67.10 and 6700 for $1.50. So far looking just fine. Katie says, should I go down to $1.20 or wait? I mean, $1.50 is not bad to wait for, but I mean, I don't know. Let's play around with the numbers. So if I did the same trade, if I do the exact same trade right now, 65 and 75, 67, 10 and 67 is trading for about $1.25, $1.30. I don't mind the numbers. Or you can do this. I'm just saying, if it's me at 941, it's like, well, $1.25 is fine. I'd say I'm willing to accept it. Or maybe going up a strike and going further up and further down and trying to at least get $1. Like you get $1, $5, $10 and moving the strikes down 5 points. That wouldn't be terrible. I think you're still going to get filled at $1.50 though. If we have a little bit of oscillation, I mean, we have a 25 VIX. I think a little bit of oscillation can still get filled at $1.50. So I'll just hang in there for the day. Defense trades, yep, I'm posting those broken wings. So it's a broken wing structure. Defense trades coming at you. These aren't filled yet, so these are all pending orders. 9, 310 expiration. On the put side, I'm buying the 6705, selling the 6690, and then 6670. So looking for $1 credit. On the call side, buying the 6870, selling the 6885, 6905, $1 credit pending. So 2 top and bottom defense trades. Price is rolling over a little bit. That original trade this morning, again, is probably going to offer close to that $1.50 now. Yep, it's trading back for $1.45, $1.50 there. Who was asking that earlier? Katie? Yeah, so if you're hanging out for $1.50, it should be getting close to getting filled. Yep, Roger says it's got filled at $1.50. Main trade dealer properly filled at $1.50, says Ellen. Skip says, I hate Trade Station. Yep, defense trades are posted, Bill. Okay, I got the 318. Okay, yeah. Yep, that makes sense. Are all trades, I mean, so daily profit play, those are typically 0 DT trades. Typically those are 0 DT trades, yep. Okay, so we'll keep an eye on the day. Market's rolling over just a little bit. Again, positive gamma stays above 67.55. So if you're watching this intraday, you want to see price stay above. I mean, a bounce at 67.55 would show us that technically it's right there at that positive and negative gamma pivot. So as long as we kind of, slowly maybe work our way down to that and then go back up, that's a good sign that, we're going to stay in a positive gamma environment. Let's see what the flows look like right now on the next couple of days. So I've got positive gamma today, and again, that level is 67.55. We're trading live at 67.82. Okay, so we've got some decent gamma sprinkled in. Like 6,800 is a big gamma level. I mean, if we breach 6,800, we can drift up into like 68, maybe 30, 35. I think our strike at 65 is pretty darn safe. It seems to be, you're gonna have to get through a lot of this resistance in order to threaten our call side. Put side, it's pretty minimal. You've got some pretty decent support around 67.50. We got that positive gamma or positive negative gamma pivot at 67.55. So, I mean, so far structure looks pretty good today. Nice Keith filled at $1.50. D's asking, how long does it take to get set up on Tasty Trade? What balance they require? So Tasty's pretty simple. I mean, I've had accounts up and running within like 3 days. If you fill out an application, fund the account, usually they're released to trading for like 2 to 3 days. I have an affiliate code if you're interested. You can send me a message, chrispulverpub@gmail.com. You can send me a message. I've just got a referral code. So, but I think Tasty only requires, if you have a margin account, in order to take this trade, a margin account having $2,000 in it, $2,500 in it would be enough. I mean, our buy power today required $850 to take the trade. So, if you have a couple $1,000s, it's going to be pretty safe to take these trades each day. Back to the real quick note on pattern day trading. Let's see here. Pattern day trading going away in 2026. Let's see if there's any updates on this. So I saw Tony the Bat Batista on Tasty Live. He had posted something on X or Twitter not too long ago, like the last week or two. And, everyone from Tasty Trade has talked about, Q1. So by the end of this quarter, maybe your pattern day trading should go away. So you can see it right here. Expect it to change in 2026. So expecting to lower the equity requirement from $25,000 margin to $2,000. So as long as you have a 2K account, you can trade 5 days a week. You can take 10 trades a day if you want to, which would be a huge win. All we're waiting for is the SEC. So you've got FINRA, the SEC, a lot of retail traders who participate in day trading, SEC is considering eliminating the 4-day trade trigger, so you get three-day trades, right? And then they flag you at day 4 or trade 4. So all this hopefully goes away. The question now is like, when does this happen? So here is 2020. This is all talked about last week. Day trading 2026. Finally proposed rule change of FINRA. How to avoid breaking it. I mean, these aren't. I'm looking at something like I'm looking at time now. So I don't see it. Let me see if I can find. Well, I know that Tony Batista had mentioned, it's in the works. Like CBOE has done it. We're looking for the rubber stamp from the SEC. This is the big improvement, though, is only requiring about $2,000 in margin to take these trades, and then obviously having no flag pattern day trading where you can trade as many times as you want. Which, again, in the retail crowd world, that's a big win because it's far less capital required and you can trade as much as you want. As long as you have the buying power to cover it, you can trade and go wild. But hopefully this is something that wraps up by the end of the quarter, and we're looking at, maybe this rule is done and over with by April. Hopefully. True, yeah, but again, like 25K is a lot different than having just 2K. I mean, it's what you can't do in an options account is you can't come in with a $500 options account and say, I'm going to trade my little heart out. It's like, typically an option trade, even if you want to go cost effective, unless you're trading like, out of the money 1 DTE or 0 DTE, you're trading out of the money for like less than 20 cents. I'd say if you're going to start trading options, you'd like to at least have like $2,000, $2,500. That's like minimum margin requirement. But the pattern day trading stuff is removed once you're over 25K. So that's the big change. It's just a matter of when is this officially going into effect. That way people can trade as much as they want. There's no restriction on that 4th day because it's a really rough penalty. I mean, if you're flagged for pattern day trading, they either freeze your account for a week or 30 days or 90 days, and that's really penalizing, obviously. So I just looked to see if there's a timestamp update on that, but there's not. So in effect, the new rule 2K could be considered correct. Yep. So the new rule, again, I don't know when this officially happens, but hopefully most brokers just adopt it and we're just ready to trade. But it would require only $2,000 on your balance, and you could trade if there's no pattern day trading any longer. Then you could trade 3 times a day, 5 times a day, 10 times a day if you want to. If you trade Forex, you can trade as much as you want. If you trade futures, you can trade as much as you want. But for some reason in options and stocks, you can't. So that would be hopefully a nice win for the retail crowd. Right? Yeah, and that's what that's what the truth is. I mean, Snapper says, let's get the risk taker retail traders in the market. Yeah. I mean, it's going to add some interesting liquidity. It's going to add some more, crazy volume to, and it's not a ton of volume, obviously, with smaller accounts, but it's still going to add option flow, right? And there's going to be probably a much bigger push in 0 DTE, and we're probably going to see some crazy statistics like, hey, look, 0 DTE, SPY options, SPX options, it's 60+% of daily trading volume. It's already there. It's already there at like 50+% is SPX 0 day. I'm curious how the Mag 7 Monday, Wednesday, Friday expirations look right now in volume. But a lot of the stuff is just going towards like short-term bets. My recent research indicates there isn't a day trading limitation in Canada. I mean, that's great, Dave. I think the only thing Canada has is they have terrible margin requirements because they're extremely high and their fees are pretty outrageous. A lot of the broker fees are pretty high. That's the trade-off, I would say. Thinkorswim still reports my day trades left with a 200K margin account. I'm kind of the same way. I noticed that in my advisor account, I have some of these when I go to like, there's something in Tasty where you have to go to like, I'm monitoring. And that way it's like, I tell the broker, don't close assignments early for me. I'll take care of it. I'm watching, I'm monitoring. And so most of my accounts, even over 250K, a lot of these accounts are still like, they still have pattern day trading status. They just if I take, like yesterday, I think I took 102 trades yesterday. So when I take those trades, obviously the broker's like pattern day trading. Oh, it's over 25K. Pattern day trading is over 25K. So it's a weird checkpoint that, obviously if I have over 25K, it's never a problem. Yep. And you can see that here in the counter. It will say day trade counter. So I'm already at, 8 for the day. But every account's over 25K, so it doesn't become an issue for me. Good stuff. Just checking on YouTube. All right, how are we doing? Switching to Webull. Tasty has $5 per leg assignment exercise fee. Sure. I don't know how Webull's going to treat you any better. I mean, again, these conversations happen all the time. I'm not here to tell you what broker to use. I'd find it difficult to have Webull give you less fees. I mean, I trade with Tasty Trade at 60 cents per contract, entry only. And yes, I get charged a CBOE fee that's like, $4 to $5. I get it. But that's a CBO fee, that's a futures fee, a CBOE fee that's not avoidable. So I don't know if Webull's going to be any better. In fact, I doubt it. I mean, I get treated pretty well at Tasty, and I'd be hard pressed outside of maybe Trade Years, the one broker that I think has like a flat option fee, which I still don't know how they make money doing that. But I swear there's going to be fees attached to it that you don't know about. I mean, I pay 60 cents entry only. So, I mean, at the most for me on the trades I just took, it's going to cost me like maybe $6 or $7 for my trades. And there's no free lunch and trading options. It's not free. Okay? So all I'm saying is, to me, what matters is my fees are reasonable. I know what they are, but I want execution and I want permissions. If you can take, every single trade and permissions that you want for Webull, great. I just don't think that their fees are going to be better. Schwab says 65 cents, no close fee, no assignment fee. Are you sure about that on the close fee? I would double check that. I feel like they would go 65 cents entry, 65 cents close. So you're at $1.30, or they can get down to 40. Sometimes they go like 40 cents entry, 40 cents close. Maybe the assignment fee. Again, I'm not going to sit here and, penny over like what our fees are. It's like, I don't give a shit. If you know your fees, great. I would say Interactive Brokers, Canada traders, you probably get treated the worst. Canada has fees where it's like 10, 15, 20 bucks on some of these open to closes, which that's definitely steep. If I'm making 100 bucks a day and I got to pay 20% of that to the broker, that's not fun. So anyway, I'm not going to sit here and go back and forth on who's got better fees. It's not a contest. So all I know is I've got reasonable fees. I know that it's not a free lunch. I trade to make money. Fees are part of the game. But what I want is good permissions. I want fast execution. I want to know exactly what my trades are doing. Okay? All right. Here's where we're at for the day. So 67.74, again, positive gamma around the 67.55. So if we do slide down to that level, I'm going to keep an eye on that and see if the market will bounce off of it. So between this level of support, which is around these previous highs, is kind of the inefficiency run from Trump's comments yesterday, 67.35, 67.25, but a bounce off that gamma level. If we hit 55 or so and then go back up, that's a good sign that there's some positive gamma flow today, which positive gamma means that people are selling calls above price and they're selling puts below price. And that's a nice kind of contained day. When things get into negative gamma, that's when people are selling calls and buying puts. It's a very different volatility profile. Okay, so we'll see what happens if we slide down to about 67.50 or 67.55. Does the market bounce from there? Plus minus in the day again, we had a plus 70 this morning. It was 69.5. So I just rounded the blue lines right around 70. And let me see how our daily profit is doing this morning. So SPX here, 1, 2, 3, 4. Currently up about, let's break even. I'll just keep an eye on it. Okay, it's only 10 wide. I went a little bit closer to my expected move, which is fine. Gamma at 35 and 50. I don't know if that's going to give me much credit right now, but let me just double check something. So 50 by 60. Let's go a little bit lower. Could I go sub 67? 67. Okay, I'm gonna look at another. See if I can get another $1.50 here. Make sure these don't overlap. So no overlap, no overlap. A little bit lower on the strikes, still at the 15 wide. All right, let me see if I can get $1.50 on this trade. So pending order for a second daily profit play. See if it fills. Just looking for price to stay within the expected move. All right. Defense trades in for 50 cents credit in advance. I mean, I'm putting them in for $1, but I'll keep it. So right now it's like I could take the defense for a 10-cent debit, you know. So what this does is this: if I take the trade for a 10-cent debit, that means that my $1.50 is going to be worth now $1.40. If I take both defense trades, like the put side is showing about 20 cents debit. Well, if it's trading for like 10 cents, I mean, I could take $1.30 on my daily profit play, have two very cheap broken wing butterfly structures that, you know, 10 cents gets me a $1,500 profit trap. But if we have a decent slide to the downside and our put side is threatened, this might offer a little bit of credit. So I'll just kind of monitor that through the morning. Okay. All right. Again, this will be kind of the key tell for the day is if this Trump move yesterday is slowly backfilling to positive and negative gamma, right around that yellow line is 67.55. If we bounce off of that, that shows that the positive gamma is in check. If we slide below that and it comes back to the Trump bump yesterday, then we'll see what the day looks like. But hopefully we're not taking, you know, I mean, again, how noisy would it be to have this be the end of the day yesterday and have the market come all the way back down to take it out? If we test it, that's one thing. But if we take it out, it's like, why did Trump say anything yesterday? All it was market noise. So we're not done. But let's see if we get a bounce around the 67.55 handle. Okay. All right. Meanwhile, so while we're hanging out with daily profit play for the morning, keep an eye on that. Okay, I want to take a look at, we do have some earnings this week. So I want to take a look at this on my pinch point scanner. I'd like to take a look at some of these. We have MTN Oracle. That's MTN is Vail Resorts. I think they had earnings already, so I might have missed that one yesterday. But here is my earnings print. So Vail was yesterday after the close. I'll take a look at the chart. And then I put the list together here. So this is pinch point scanner from yesterday. MTN just had earnings. Let's see if there's a mover. I'm going to move this over. Okay, let's take a look. Take a look. So let's go to MTN. So pretty pinch. Let me take a look on the bigger time frame. This one might be just a good one for. I mean, it's been a pretty rough winter. I do know that. Gosh, it'd be interesting to see. You know, this is COVID lows. I mean, we have lows around 127. It's like I'd almost rather just be like buying this to the upside, but it's like winter is almost done. I mean, I know there's some year-round skiing here in the U.S., but not much. I mean, our winter we've had like a pretty weak winter in Utah. Park City. I mean, I know a few of the instructors out here, and I think I just saw one last night, and apparently we're gonna get like 70-degree weather later this week or next week, and it's just gonna take whatever recent base we just had. It's probably going away. So. He seems to think that, you know, the resorts and stuff might be closing like mid to late April if it stays this pace, as far as like how much sun we have at 10,000, 11,000 feet, how much lack of snow and precipitation we have, so we could have a very short ski season. Anyway, point is I like the COVID lows. That seems like a pretty good support level. But if I'm going to go long now, it's like, what is the price incentive to go up when we're pretty much heading into an off season? I don't know. So I might hold off on MTN. Let's go Oracle. Oracle has earnings this week. Let's get one priced out. Oracle's at 140. I mean, we're basically trading at 150. I do have some $100 exposure on Oracle. Let's price out some options here. Let's go. So weekly chart, it's already declined like 50+%. I might take a similar trade. Remember the AVGO trade we did where we had that broken wing to the downside? So back down here around 135. Let's see the expected move on Oracle. ORCL. We have earnings today after market. I could go to the 13th, which is Friday. 135. I mean, that does maybe get into that expected move area. Let's see. I'm curious what our kind of broken wing structure would be. Maybe I can do like a 130. Let me check the expected move. So a couple things here for Oracle. So Oracle expected move, we're trading around 150. Expected move, wow, average is 20.5. So that's a percentage. So 25 divided by 149. Oops. So 20.5% times 149. So looking for like a $30 move. That could potentially put us around 120. Okay. So let me see if I can get a profit trap in here. This would be an interesting setup. Maybe go like 130 or 125. 125, 120 by 110. That's gross. 130 by 120 by 105. That's going to be a little bit wider. That's a debit? Gross. Fudge. 135, 130, 120. Hang on. Let's try this again. Let's go 130. So 125, 120, 110. See what this structure looks like. Yeah, so that's still a debit spread, which I don't want. I'm trying to do a broken wing butterfly with a credit. So last week, AVGO, we had a little 53-cent winner. I'll try something similar here. That would be 5 wide by a 10 wide. That's still offering 8 cents debit. That's crap. 135, 130, 120. These are terrible. 130 by 125, 60 cents to risk 4. That's a garbage trade. Well, that sucks, man. I guess if they have positive earnings, would it be worthwhile to take just something cheap? If I do a bull call spread, I risk 40 to make 60. I mean, if we go up on Oracle, that's a good sign. Earnings this week. Today after market, manage this on Friday. We have CPI this week. I don't know. I don't like it that much, I guess. 135 recent lows. Let me see if I can tighten up the broken wing a little bit. If I went 130, 128, so that's 2 wide for a profit trap or 3 wide for a profit trap, and then maybe go 7 wide. Nope, it's just not giving me the profit trap I want. Let's try 4. So I get a little bit of credit there. So 3 wide. No, I'm just going to say no bueno. Let's check the expected move for Oracle. So broker's showing a plus or minus 15. Wow, that's way, way lower than the expected move. So 1502 is the expected move. Average earnings move that I've seen, and again, this is over like 50 reports. We're getting a lot in the teens, like 13, 18. but that seems like a very high average move. 18 was the last one, 11. Let's see what 15 points is. It's about a 10% move. So broker's expecting about a 10% move. Let's see what this looks like. Look at the skew on this thing, by the way. I mean, the upside is, maybe the strikes are different here, but this goes up about 13 points, and this is going down about 15 points. There's certainly a lot more, you know, skew to the downside. Again, that's not giving a direction. It's just showing like you're getting a lot more value on the put side, you know, going further out of the money. So anyway, I thought I'd find a trade in Oracle. I just don't like the setup. Based on earnings and stuff, we could have a bit more of a surprise. I'll probably do this on Oracle. If we have a gap lower, I might, and this is a might, take a cheap debit spread for like 2 to 4 weeks. So that way, if we have one final flush, I mean, it's sitting at a pretty good support level. And if it flushes lower, you know, maybe going a little bit bigger here. If we have positive earnings, I mean, it should be a recovery trade. Let's see what IGV is doing. Yeah, I mean, that's why I'm not excited to jump into Oracle. It's like if IGV had that short-term pop and it's starting to fade, this like AI software, you know, SaaS again, whatever it is, you're taking on debt. Oracle's like the first red flag in the AI spending. It's like we're taking on debt to put in our spending. And you know, the math has already been worked out by Barclays that they're basically going to spend more than they make. And I don't know, I just put that on. I put them on the radar for maybe being like kind of .com. I don't know, just disrupted. The demand is there, but I think if it's all CapEx spending, one thing that is kind of nuts is literally every CapEx spending bubble that we've had has ended in something terrible. I'd have to find the image of it. I think 42 Macro did it with Darius Dale. It is not an encouraging sign that whenever this is done with all the spending that's going into building out AI infrastructure, it's probably going to end badly. There's going to be, you know, amazing breakthroughs and productivity galore. It could be like one of the greatest technological innovations that we've ever seen in our time in modern history. This could be the greatest thing since the internet. But the casualties and the victims that it takes along the way, it's like it's going to be so difficult to say that one stock is going to be the clear winner, because I don't think it will be. This is why I've said for the last 6 to 12 months, it's like I might not have the big fancy 50 to 100% gains on some individual stocks, but I can survive with the haystack. I can survive with the indexes, because if we have more productivity, we have better corporate profits, then the benefit goes to the indexes. The best companies rise to the top. Better profit margins boost earnings. But what I don't want to say is one individual stock is going to be the best thing ever. So I'm going to hold off on Oracle as far as the option trade for earnings. I've got some ratio spreads and project options edge down to the $100 zone. Hopefully that seems pretty safe. We'll find out. And then let's move on to the next setup. DKS is Dick's Sporting Goods. They have earnings this week as well. I saw somebody asking about UUP. Is that dollar? UUP is a dollar ETF. Well, I think that for right now, I wouldn't short this. I think if we're going to sell the dollar, you want to see the dollar back to like 28.50 or the dollar back up here to about $30. So I think that the dollar could be one of the more surprise moves of 2026. Everyone thinks that the dollar is going to be just this guaranteed short. I don't think that it is. I think if you look at the DXY, we're holding support and we have resistance up here. UUP could be treated the same way. We could go a little bit higher. Maybe it turns there and just stays in a range, right? Or maybe the crowded trade is everyone is thinking dollar short, dollar short, dollar short. But instead, this is probably the most asymmetric trade on the dollar, is just letting this thing go to the upside. So, I mean, I hate to say it, but it's probably cheaper to trade UUP long than it is short. And it may not be a popular trade, but I don't know. I take my chances on it. Let me see what it looks like. If I did a bull call spread on UUP, maybe out to May, maybe the end of the year, maybe September till the midterms. I mean, it's not a great option trade, but 27 by 28. I mean, really, I'm going to pay 65 cents to make $1? No, thank you. 26 by 28, $1.47 to make $2? No, thank you. This one's a little bit better. I can pay 88 cents to make 2, but now 29 bucks is way up here, right? I mean, so I'd be long. I've got to have price clear the 29 handle. Like, we're breaking all the structure. I don't know. I don't think I have a trade that I really like. If I was buying it, long at 27 and let it go higher, let me see what that looks like from a call side. It could just cost a couple $100. If I just bought I'd buy a little bit deeper in the money. I mean, here's a 70-80 delta. It cost me $300. If I buy the 25, okay, if I buy the 25, my strike would be way down here. I'm break even around $3. So that is that'd be trying to get filled for like $3. You have a break even at 28. That just requires less of a move. I don't know. I don't think I like the dollar that much. To me, I look at the chart. And I would rather be, getting a chance to buy this thing low again and buy the lows of UUP, or I would call a defined risk top around $30 to $30.50. That's about it. Otherwise, I wouldn't touch it. Yeah, I bought long 27.70. I mean, good. I mean, if you're owning the shares, then yeah, that's fine. I mean, own some shares. I just don't know if we're gonna have I mean, the dollar could just be range bound. Here is the DXY. So I think everyone's looking for big fat direction on the dollar, and I think the dollar's just gonna disappoint with a lot of this. Dollar could just be doing this, right? That to me seems like the more likely trade. And if we get a break above like 101 or 102, that's where all of the forced shorts are going to be squeezed to the upside, and I think this is where the surprise happens. If we break above 102, I think this thing can squeeze back to like 104 to 106. We might not stop until we hit levels like this, and then maybe there's a short all the way back to like 110. But that is a not crowded trade, not at all. I just don't know if we're going to have the confirmation to get above 102 yet. So I don't need to force a trade to hope that it does, because we're still holding this kind of structure right here where this looks like a descending wedge. And if the dollar breaks down, sure. I just think that it's already been like the anti-dollar trade, debasement trade, dollar's getting weaker, blah blah blah. But there was a phenomenon back in the 80s where the dollar was up and stocks were up. So I just want to watch the technicals and see if we actually get some clean breakouts. Oracle planning to cut 30,000 jobs to fund their AI capex. I think stocks will shoot up in earnings. We'll play it then. If you think that's the announcement, the market's going to love that, then play it. I mean, it's cheap to take a bull call spread. It really is. I mean, look, Oracle. If I want to risk $100, I could go to the March expiration, or just go to this Friday since earnings are today after market. If I buy the 148, sell the 149, it's just under 1-to-1. If I go one strike, I trade at the money call. It's 45 cents to make $1. If they go up on earnings to fund capex spending, then there's an easy winner, right? So if I go 2 contracts, I risk $90 to make 110. All we have to do is be above 150 by the end of the week. It's possible, but like I said, for me, I just look at this chart and I'm like, well, if we're down to like 135 first, or we gap lower, I'd rather buy that gap and look for a fill than just assume we're going up from here. So I'm going to hold off on forcing a trade on Oracle. I think the better trade is if we go down, I'd rather buy that gap and give me some time and try to get that thing to fill. So here's a potential trade I'll look at, after earnings. Let's say that the market is, if it's up, I miss the trade, and that's fine. I obviously have a ratio spread. I'll still make money on that ratio spread. But if we have a gap lower, then I might look at putting in some type of broken wing butterfly structure. That way there's no risk to the upside, and see if we can get a decent at the money credit. So if I can get $1 to risk, I don't know, maybe risk $4 to make 1, but have a, $300, $400, $500 profit trap, I'd give that a whirl for maybe a 30 to 60 day window. Trade view is falling wedge, same as UUP. Yeah, falling wedge. That's one way to look at it. I didn't really see the falling wedge. Well, I did see it. You can see the chart that I have. Like this is falling wedge, but now I look at it as, let me use a bigger line. this is what I see here. We have support. We have resistance. I mean, the falling wedge was why I was long at this double bottom, and I got that trade to the upside. But now that we come back to retest it, I just think we have support. We have resistance. So the dollar's still range bound. If the dollar can break above 100, then I think that squeeze trade is back to 104, 106. But it's still in this sideways chop right now. That's where I see the dollar. Yep. So we'll see. All right. Anyway, what's next? DKS, Dick's Sporting Goods. DKS. Dick's Sporting Goods, 195. Let's see. They have earnings the 12th, so on Thursday morning. Let's check the expected move. Expect to move around 6%. Let's see what the broker shows. Broker show. So I don't even have weekly expirations on DKS. I got to go out to the 20th. 1751 divided by 195. So we're looking at like a 9% move from the broker side. Average earnings around 6 and change. I mean, a calendar spread could work out pretty nicely. We can get like a quick earnings crush in this. The problem is expirations are kind of crappy. I can't really do a calendar spread and only have monthly expirations. So that sucks. I could do one of these puppies, which is sell the at the money. And, we got a 1750 move for next week. So if I go 20 wide, I'm curious what, again, this may not be a great trade as far as risk goes, but let's go percentage-wise, I can go up to the 220. So that's about 25 wide versus this is 15 wide. So I can go 25 wide here and then go 25 wide here. So if we stay range bound, I'd be risking 900 to make 1500. I need price to just kind of stay within this range if it's a quiet move. 1591 gives me 1591 out of the 195. I need price to stay within about an 8% move. Average is around six and change. I don't know. That seems a little pricey to me. I could maybe be more creative this way. That'd be 85 to 220 is 35 points. Move this down to 60. That's 35 points. Now it's still just over a 1-to-1. It's just a lot of risk. That's just a tough trade. I'll put this one as like I just don't like the precision on this one. I'll pass. RBRK. Rubric 55.55. Earnings this week on Thursday after close. Expected move. DG, is that Dollar General, William? Is this thing... there's not a lot of history here. When did this go live? This was 2024. So is this a merger or is this an IPO? We don't have a ton of data here. So IT services, what do they do? Backup recovery, VM backup, Microsoft 365, ransom database, blah, blah, blah. All right, that's fallen in the software space. Maybe something to find risk at the lows, 47. Let's see what this looks like. RBRK. Expect to move 826. So expecting about a 15% move, 14.8. Average showing about 20%. So calendar spread's kind of out of the question. Could I get a I don't think the structure is going to be great for a broken wing, but let's find out. Down here to about the 46.60 lows. If I went 47 by 45 by 40. I don't love that trade. I mean, it's a profit trap opportunity. But I have to open up a little bit more risk there. So let's go debit. Debit. No, I'm not going to take that trade. I want to get a credit. So if I did a $2 profit trap, $2 profit trap by $5, I mean, I can get 20 cents. I'm not excited about the credit. It's more like the profit trap if we go down to the expected move. Yeah, that's a maybe, Pete. Could be. It could be one of the disrupted spots. Could be. Polo, Leighton. What's up, man? I'm in Farmington, bro. I'm close. I'm up in Leighton like 2 or 3 times a week. Nice. Polo, send me an email. Send me an email. chrispulverpub@gmail.com. Send me an email. chrispulverpub@gmail.com. Yeah, let's grab some coffee or something. All right. If this was trading for like 50 cents, I'd take the trade. 18 cents, I'm not that excited about it. Nope, Farmington in Utah. There's a Farmington in Michigan. Apparently there's one in New Mexico. But no, there's a Farmington in Utah. It's about 15 minutes north of Salt Lake City. Okay, daily profit play looking pretty good. That 150 is up about 50 bucks. If I can grab for that trade, I mean, I'm trying to grab, $100 and some out of the day. I think we went pretty safe on it, so let's keep an eye on that for the day. That second trade, that's the 50 zone. I'm going to cancel that one. I'll just keep the same 150 bucks on this today. Double ups, back to flat, bearish breakouts, flat. I should have off the 20th on that freaking breakout. Waterfall, a lot of stack trades. Waterfall, I'm definitely we're gonna have a windfall of profit. If we survive these waterfall income trades, we're gonna have a nice windfall coming into like May, June, July. I mean, we'll probably have several $1,000s if we land a profit trap that gets really fun really quickly. But just time is our friend. We just need a little bit more time. But a lot of trades stacking up. All right. Anyway, so I'll pass on Rubric for now. If it was a 50-cent credit, I'd take it at the Broken Wing Butterfly lows here, but I just don't like the structure for 18 cents. I'm not that excited about it, so I'll pass. KHC, we did some naked puts on this one for Project Options Edge. This one we put in KHC. This is at the top of my food chain for the pinch point. KHC is in here somewhere. There it is. So a little naked put combo. So NPs for naked puts, $22.50, $20, and $17.50. I pulled in $333. It's up in profit. I'm willing to take some assignment. There's almost a 7% dividend on KHC. It's beat up, pretty badly. I'm just trying to, take some ownership down here. I think my break even would be like 18 bucks, which I'm, if I did own it, I'm happy to own it for some price appreciation plus a dividend. If it goes up from here, then I'll just grab 330 bucks. So that's all I'm going to trade on that one directionally. Alcoa or AA, Alcoa. Looking at a nice pinch here. I think Alcoa is looking good to the upside. I just want to see a breakout. Alcoa is aluminum. I've been long aluminum since the lows here around $25 to $30. It's obviously worked out pretty well from an ownership standpoint. Now that we are pinched here, I'm looking for path of least resistance to be upside. One thing that wouldn't be a terrible trade is just getting long with a bull call spread. I kind of like the bull call spread on aluminum. Again, like this AI build out, we're not in a terrible spot to take this thing long. Better trade to me is getting something around, like, again, we can probably set this up for like a broken wing structure. Let me take a look at this one. This one there's no earnings. This is just a good pinch point trade. Let's take a look at pinch point for Alcoa. So I have some shares already. I'm looking for a broken wing trade. Previous lows around this like 56 to 55 handle. Earnings coming out on the 15th. I mean, if we go through earnings, I mean, that sucks we don't have any May expirations, but I can go end of April. I don't know. Let's see what June looks like. I'm going to go broken wing butterfly structure, have it set up where there's no risk to the upside. So if we go up and I have a trap down here, and then there's a little bit of risk if we break this structure, I think we still go up on Alcoa. That is my hope. So let me try to set it up and see what that risk reward looks like. Structure would be around 55. So if I were to buy the 55, sell the 50, buy the 40, 35 cents. Now, to be fair, it's like I have the upfront credit at 35 cents. There's no risk to the upside to make that 35 cents. I do have a profit trap if we come back into 50 bucks. Do I love that trade? Not really. Just because the credit is so low, it's like I'm not excited about making 30 cents. But going maybe up here, 80 cents, but now I just move all my strikes by 5 bucks. So now my break even is $50. Would I take any assignment on this? I already have assignment. It's all the way down to like $25 to $30. I'm not really interested in owning more shares now. Let's do this. I'll set this one as a pending order. This will be a bonus trade if anybody wants it. Let's go. Let's see if we can get this one filled for $1. $1 credit, so I'm risking 4 to make 1 with a $500 profit trap. So I can get paid up to $600 on the profit trap total with credit, and I'm only risking 400 bucks. The price is, it'd have to be below $44. For me to take on any risk, it'd have to be below 44. $44 is quite a ways lower. In fact, this is a good structure point. I mean, I think our break even would be pretty fine. So I'm going to take this trade. It's going to be a pending order. See if I can get $1 credit. And this is going to be the June 18th expiration. So we're going $1 credit on Alcoa. They do have earnings coming out in April. It's not really time sensitive, but I'll throw this trade in here. Again, that's a pinch point trade, but I'm going a little bit farther. Let's try this one, Alcoa. I guess technically I can put this in my pinch point service. So that is 55 by 50 by 40. Trying to get filled for $1 credit. Keep an eye on this one. All right, so I'm going to put this in for pinch point. Trade 114. This is Alcoa. Today is the Today is the 10th. Alcoa. I'm going 618 expiration. Buy the 55 put, sell the 50 put, and buy the 40 put. Looking for $1 credit. Okay, broken wing butterfly. So that's in pinch point. Let me put that in Telegram for everybody. Project drops its edge. Pinch point, new trade. This is trade number 114. Alcoa. 618 expiration. Buy the 55, sell the 50. Buy the 40, $1 credit, pending, good till canceled. Currently showing about 35 to 40 cents credit. Trying to structure this no upside risk broken wing butterfly for $1 credit. Max risk $4 and a profit trap at or around major support. Okay, pending order. Yeah, it's a lot for aerospace and AI. Yeah, I know. I mean, look, the stock is already up a ton this year. It's been a good run. I think there's more to it. I mean, the stock from here, the value play has been pretty solid. I mean, the stock's already up 200%. Year to date's up 12.82, but we had a lot of this run late, like summer to fall last year. So, just technically speaking, I've been watching this one closely because I wanted to buy, kind of this value play going into end of 2025. Once we got a breakout in here, I mean, to me, this is a new level. We either consolidate to go higher, and I'm trying to take profit here in like the 80, 90. It's like, I'm not trying to hold on to this thing forever. But certainly if we go impulsively, if this is a wave, let's say we round out here, one wave. I mean, I'm looking for maybe this to be a flag pattern, or if this is a wave two, that's a minor wave two. But if it is one, maybe two, and then three, I don't mind giving us like no upside risk in here for at least an income side, and then I'm going to keep the shares and hold on to those to symmetry to get me into this green box. This is where I'm looking to take profit up here in that green box. So yeah, I don't know. It's a pretty good trade to me and decent structure. So I mean, our break even would be around 44, which is back into this major support. So if we just go sideways here, go up, there's no upside risk. Issue is if I don't get filled for $1, there's just no trade. Okay, we also did a power trade on Generac. That's looking pretty good. You bought Howmet? Howmet, your mother? Howmet Aerospace. I mean, yeah. Aerospace has been crushing it since last year. Let's see what... so that is HWM. Snowflake looks pretty good. Insider selling's the only risk I really see. 70 times earnings. That's my, I don't know, trail stops, I guess. Current price is 250. Discounted cash flow shows 183. Probably due for a pullback. But I mean, that's the thing is like, you don't want to short a stock like this. It's just trail stops. It's a great runner. Year to date, it's up 24%. The last year, it's up 110%. These are great runs on individual stocks. Okay, DPP's up 50%, good. I mean, that's what we want, right? So we're kind of right back where we started for the day. That's good for us. Daily profit play up about 70. I'm going to try to get $100 out of it today if I can. I'll shoot for 100. So lows on the day, 67.60 again. That's why we talked about the positive gamma level. Right around that positive gamma turn. 55 was the exact turn. Does it mean the market's going to rip up to 68.50 today? I don't know. I don't think so. What's the VIX doing? VIX is going down. So VIX turned pretty hard around that 10 o'clock handle. It's heading lower. So we'll see. I mean, I'm just hoping that the market stays within our blue lines. That's where I need it to be. That's where I want it to be, and we'll see what price does for the day. All right, good stuff. Let me check up on some updates here. Anything for me? Deanna, what do we have for a stream right now? What do we have for a stream today? I think we have engineered options. Is that true? Okay, let me see something really quickly on engineered options. I'm ready to fire it up here in just a couple of minutes. Trade's looking pretty decent for the day. Let me pull up this workspace. So I'm just thinking if I should start a participation trade for us. This is where the week started. Son of a biscuit. Darn it. I mean, we survived last week, pending orders. We didn't get... So we have some monthly trades getting filled. But right now the market is up from the open. So the open of the week, market's already up. It's like, I'm not going to chase that. So we talked about the participation trade in engineered options. I'm not going to chase this thing. It's up 1.3%. As we have done and survived almost every single week in 2026 with all this chop, I'm just going to let the market do the market thing. So anyway, I'm not going to chase this to the upside. We have some monthly trades running, which is good. And I'll hang on to those. So my Marches looking fine. Let's see what happens for this week. If the market's going to dip and pull back, then we get filled in some of these trades we put in yesterday. So trades are still valid for this week on engineered options. I'm just going to kind of ride this out. I'm not going to chase this thing when it's already 1.3% higher. I'm gonna keep it around that 0.2, 0.3% higher or the break-even prices and play my defense. All right, let's just double check a couple things. Upside, VIX is retreating. Okay, fine. As long as we're above 68.50, that's the big gamma level. Live gamma right here, 68.35, 50% ATRs run 68.60. But we're hopefully running into a decent amount of resistance around that like 68.20, 25.30 zone. All right. So I'm going to hang on to daily profit play a little bit longer. All right, Deanna, let's fire some engineered options. Just a real quick recap for anyone that's watching. List of services. If you're looking for some foundation, some foundational education, some prerequisite stuff, these are some great video series to get you started. Practical Options Quick Guide for $27. Practical Options Full Course. This is included. If you're a lifetime member of any of my services, I'll give you a $500 bonus course called Practical Options. One trade that is free all the time. Anybody that's interested in learning one trade mastery, it is taking the difference between here's owning the stock, here's buying a call option, here's creating a couple of bullish spreads. Let me post this in Zoom for everyone that's watching. So full session, let me copy that link. If anybody's ever interested in this foundational stuff, you can always send me a message. chrispulverpub@gmail.com, send me a message. And let me copy this, put this in Zoom. So one trade mastery. There's a direct play link for you. Do most daily profit plays add an auto close? I mean, we certainly can. I mean, right now we're at a spot right now where we could probably just say profit's good enough. We're at 50%. Mechanically, yes, I like to go like 30 to 50% is a great profit target. When I go a little bit lower on the deltas, I did like my call side especially was like a 6 delta, so I'm pretty sure that the call side shouldn't be threatened this morning or today. And so I'm going to try to sneak in over $100 on my daily profit play. So I pulled in $1.50. I'm going to try to get this thing for 50 cents or less as a winner today. 50 cents or less would be good. And I'll keep an eye on this for the day. Okay. All right. One Trade Mastery link is in the chat. If anybody's looking for some foundational education just to help you with the language barrier, the learning curve. I mean, options can be intimidating, at least up front, but I try not to make it that. I try to make it very approachable and very realistic and practical. So that way, are we just taking a calculated risk, calculated bet to trade the market bullish or bearish or sideways? So my full course has 13 of my favorite strategies. One Trade Mastery is essentially just looking at an example of I like to trade the SPY, I like to trade Apple or Tesla or Nvidia or whatever you want to trade. Just make a calculated bet and do that over and over again. For the most part, you have a house edge to be bullish in the market. That's what Deanna's going to show here for engineered options. We trade the historical edge. We're trading probabilities that go back 70 years that the market has about a 56 to 58% chance of being bullish most of the time. Even through bear markets, the market still is bullish daily and weekly, like 54 to 50% of the time. So trade that edge and structure trades with engineered options. We have only had one of this entire decline. This is XSP here or SPX, whatever. But the year, let's go year to date. When did we start this year? Okay, I'm gonna see my cursor. This is the start of the year. Okay, is this a very bullish market? This is where we started the year, right here. Okay, so this green line, this market has been up a tiny bit. We've gone up about 1.7%. We've gone down as much as 3.5% from the beginning of the year. And from the little peak to trough we've just seen, it's like we just had this absolute chop fest of plus or minus, 0.5%, 1% for the last like 2.5, 3 months. This market hasn't really gone anywhere since early December. We've been in an absolute sideways chop through December to now. Anything can happen. I think that maybe this dispersion trade continues and there's more, pressure and unraveling to the downside, not in a big way, but just, it's an organized backfill. It's an organized, we had a reflexive rally of 40+%. So it's just an organized pullback. But looking at, daily timeframes, here's SPX. Okay, we still haven't tested the 200-day moving average. That's one thing I'm watching for SPX is maybe we hit the 200-day moving average. I think on the CFD, we tested it. That was like the test of the CFD hit the 200-day moving average, which I think why we had such a strong rally yesterday. At least, the day was already off the lows and then Trump just kind of threw it in to overdrive at the end of the day. But SPX still has the 200-day moving average that can offer some support. And we'll see what happens. But we've been surviving nicely, making some money week after week, and that's not a bad thing considering the market has gone absolutely nowhere. I certainly like making profit on a regular basis. So, screen not showing. It should be. Deanna's got the screen right now. Oh, I'm sorry. Deanna's got the screen. That's fine. So, we'll come back and talk more big picture stuff. Let's play some engineered options. I'll keep an eye on daily profit play. We need prices to stay below 68.65 on the day, and hopefully that is going to be a safe win for us. And we'll play some engineered options. I'll be here live answering some questions on my YouTube session. I'll cut it down here. Thanks for watching. Thanks for tuning in. YouTube.com/financial wars, YouTube.com/Chris Pulver, and we'll see you soon. All right, thanks, Deanna.